Hello and welcome. This is John Person reporting for the Bottom Line Commodity Report for the Chinese New Year. It is Sunday, January 22nd. This week we have a lot going on as far as economic reports in the housing sector, new home sales, existing home sales, but more importantly, a lot of earnings out this week. We also have a two-day FOMC meeting, and this is one of those meetings where they're going to come out and announce everything at 12:15 Eastern Standard Time, but Ben Bernanke will be out at 2:30 for the press conference. So be aware, Wednesday will be the big day for the announcement. In the meantime, we have tons of earnings. If you click on above the video, you'll see where it says Calendar of Events. Click on that link right next to where it says Archived Videos. This week, just to give you a synopsis, if you will, Halliburton, Texas Instrument, Zion Bancorp, AMD on Tuesday. That was Monday. Tuesday's AMD. Apple, of course, McDonald's, Travelers, Verizon, Yahoo, one of our holdings over at PA Stock Alerts. Wednesday, we have, it's almost probably the biggest earnings day of the week with Abbott Labs, Chevron, Corning, which is GLW, Occidental Petroleum, OXY, Netflix, Murphy Oil, Sandisk, Symantec, amongst others like United Technologies, UTX, just to name a few. On Thursday, Amgen, Baxter Lab, Bristol Myers, Caterpillar, Clorox, I mean the list goes on, just to name a few. Verizon, VeriSign, AT&T, Starbucks, Motorola, 3M, just an amazing list of companies in the S&P 500. And I'd like to mention for our commodities, we have this week a couple weekly buy signals. One's in sugar, and this pattern could provide quite a move in the sugar complex. From a seasonal perspective, typically sugar can rally towards mid-month of February. So I don't know what we're going to expect out of this trade, but if you do, we'll be looking for some kind of a daily pullback. Just wanted to show you a weekly basing action, weekly buy signal. Let's see if we get a pullback into like around where the moving average area is, around 2378. Let's see if we get a pullback somewhere around 2378 up to 2410. I think your risk in this case, you're going to have to put your stops well below 2343. We'll revisit sugar, but it is a definitive buy signal on a weekly basis. Also, look at this, a high closed doji. So I think if we get a pullback into this zone right in here, between 2378 and 2410, I think that'll be a decent pullback. You'll still make a higher low, and then your stop would have to go underneath the moving average and back underneath here, or you could play it the right way and keep your stops all the way down here around 2270 underneath the lowest low of the last four bars. That would be approximately almost 100 points or so. And remember, it's $11.20 a point, so it's $1,120 play there. Profit objective, first objective is the moving average crossover here close to 2630 area. So not a bad risk-reward ratio, not one of the best, but I just wanted to point out to you some of the commodities that generated weekly buy signals. In the other areas of commodities, we had quite substantial moves in silver this past week. Silver generated a weekly buy a week ago, had a big follow through to the upside. We'll take a look at gold real quick. Gold market generated a weekly buy as well a week ago. We had a little bit of a follow through, but from a seasonal perspective, we could see a little bit of rally up in here. Probably test up to 1720 one more time. I don't know about the risk reward ratio there. Just be aware that we are in a weekly buy, so don't get too rambunctious of selling until we get some type of definitive sell signals, at least up near monthly resistance. All right, next, let's take a look at the S&Ps. Because I think what we're going to see is maybe a little bit further upside in here, but I'm not looking for much. We did come up and test the crossover of the moving average. We are coming up to test these highs. These highs also equate right at resistance, unlike where's the NASDAQ. and we'll show you that for a second. We broke out of the highs. This is going to be kind of an important week. As you can see, we broke out, and I'll just put my crosshairs. Just barely crossed over these old highs here in the NASDAQ. We hit monthly pivot resistance. It'd be interesting to see if there is any more follow-through. I know a lot of people are probably looking for a correction. They say this move has been parabolic. Folks, I mean, if you look at this trend, it's not very parabolic. We've just seemed to have broken out in the last 3 weeks. But quite frankly, I think that it just doesn't look like or feel like a major correction is in the offing here. So there are a lot of stocks that have generated some sell signals and look a little bit weak. So I don't know if we're going to see a tremendous sell-off in this market, but we could see a small pullback. You have two ways to play it. Look for an intraday or daily sell signal up against this monthly pivot resistance area, or wait for the pullback, look for buy signals, and go with the dominant trend. Seasonally, this is a strong time for stocks headed into May. Remember that. But we definitely get an end-of-month sell-off. Typically, the profit-taking correction ensues, and that's what we're kind of looking for here in the short term. All right. Next, let's take a look at currencies, because I know a lot of people are looking at the currency markets, calling for the euro to go down. Interesting, we did form a high-close doji in the euro currency, and for me, I think this would signify a potential rally. We might get a rally back to 135 area and get a shot at getting short per our newsletter recommendation, up around 130, between 133, 33.95 up to maybe 135.12, somewhere in that zone. We'll revisit that on a day-to-day basis, but we absolutely formally completed a high close doji formation on a weekly chart, just to point that out to you. In other currencies, interesting to look at the British pound. I don't think there's a lot in the news here with the pound, but bullish engulfing pattern. We don't have any definitive buy signals right in here, but I am looking at other currencies here. Let's take a look at the Canadian dollar. Canadian's kind of forming a wedge pattern, as you can see it here. I'm not sure. We didn't quite form a high close doji. We have a shot at perhaps forming a low close doji. I'd keep my eye on this. I'm not sure we're going to see another breakdown or breakout. I guess one could use what we call a bracket trade, play stops above the market, play stops below the market. I wouldn't want to play it that way. I'd like to sell with a signal at an overbought region, or look to be a buyer at old support, which would be down around 93.70 area, or sell near 101.27. I'd have to give this a little bit. To me, it's just it's not a great risk-reward ratio to buy a breakout. Sometimes you get those false breakouts. It's just not the kind of trade I want to take place. But I thought I'd just bring that to your attention. Looking at the Australian dollar, just to go around the horn, it's been in strong, gaining on the U.S. dollar as gold has been going up. So is the Aussie dollar. So, the key is whether we're going to see more weakness in the energy complex versus the foreign currency arena, or at least the euro versus the U.S. dollar. All right, this is a chart on the TLT. It's an exchange-traded fund that tracks the price of Treasury bonds. We generated a weekly sell signal on this sideways action. We haven't really gone very far to the downside, and it has been on declining volume. So we're not really getting a whole lot of action in the sideways movement. It's just people have not been buying the bond market into this S&P rally, which is good. But I would suspect with where S&Ps are, we should be a lot further down in the bonds. And to me, it looks like the bonds have been holding up relatively well. But with the weekly sell signal, it would mean we want to sell rallies. And I'll be looking at adding to put options. If we get a rally in the bonds this week on any pullback in the S&Ps, we want to be looking at buying the S&Ps on that pullback, or looking, and that could be going into the early part of February, or we want to be selling the bonds. It's very interesting to see what's been going on here, because naturally, the Fed, with their meeting, if they come out and say things are looking improved in the economic front, and they take off QE3 and say we're going to stop or at least pull back on our purchases of the long end of the yield curve, that would definitely put a probably a 5 to 7 point decline in bond prices, and we will be back down in the mid 130s. So this is kind of an interesting week, especially with the earnings coming out, with the economic reports, and of course Ben Bernanke speaking. That's all I have for tonight. Just wanted to see how we could take advantage of when we get into Monday. I'll be in the trading room. We'll talk about planning and scanning, number one. And if we do see an opportunity in the sugar or the euro currency, something I feel that we could take a good risk-reward ratio type of trade with the low-risk setup, I'll certainly send an email to all subscribers to take action. Everyone, I hope you enjoy your weekend, and I hope your favorite team in the playoffs, whether it be San Francisco versus the Giants or whether it be the Ravens versus the New England Patriots. It would be exciting for the game if we had a New York versus Boston type of rivalry. I'm kind of impartial with San Francisco, seeing as Jim Harbaugh was an ex-Bear. I'd like to see how he does as a coach, and that would be quite a game as well. Everyone, we'll see you next week. Thank you.